Good morning, everybody. We are live. Day trading, scalping the NQ futures market on the New York Open. How's everyone doing today? I'm just going to get a screen loaded up real quick. Cool. See what the chat's saying. Thomas is back. Thomas, good morning to you, my friend. How are you? How was your weekend? How's everyone's weekend? We had a bit of an extended weekend due to Martin Luther King Day. Not much really happened, obviously, yesterday. But we did have a huge gap for the weekend. So really, really big gap right here. So I'm expecting that to be potentially touched today. It doesn't have to happen today, but it, at some point, I'm expecting a kind of a drift up back into that area at some point. Thomas says, great, except for Trump going completely insane. I hear you. I hear you. Oh, we've just opened. Very bullish on the open so far. The volume is not great, though. If you actually look at the volume, actually, no, 2,000 contracts. It is pretty good. Got the. Let me make that to 24. Let me see a bit bigger clusters. Yeah, there's decent volume in the open. All right. Let's see if we can get any trades in. So we are at another little gap, not the weekend gap, but we're approaching another, quite a nice little gap, actually. And then we got a few gaps down below that might be tested. We got very close earlier on to one of them. So I'm expecting some kind of bullish movement again on that area. I'm expecting a bit of bearish movement at the gap here above. If we get to it, I might have to be very quick at executing this trade because I'm getting this lag again. Trading View is, Project X. I promise soon I will have Trader 8 or Ninja Trader. They're just taking a bit of time getting it set up for me. So I am trading basically, and I'll be totally honest with you guys. This is basically a demo account. It's not real. So I could full port this and it would mean nothing. So I'm still on the old Project X right now, but soon I will be back into the live environment with either Trader 8 or Ninja Trader. I'm going to try both of them out and test out which one I like best. Once they give me some sort of early access kind of credentials. I think actually they sent me Trader 8 credentials. So I'm going to check them out afterwards today, see how I like the platform. But yeah, there's a big lag in Trading Views is a few seconds ahead than Project X. If this was legit and real time, this would be good because then I could scalp a few seconds ahead. I know what's going to happen. But of course, it's not real, so doesn't really unfortunately help me. I'm going to check my cash account. I'm assuming that's up to date. Yeah, my cash account is perfectly in sync. So no arbitrage here, sadly. But it's all good. We'll trade. I have got my cash account open on another screen, so I'll be looking at taking trades on that too. Hopefully we get some good ones. I might not go in 25 minis like I did on Friday. That was a bit mental, but nonetheless, maybe 10 minis on a good day. 10. I could pump it up to 15 if it allows. But yeah, look, the candle's already closed on Trading View, and it's still. Yeah, there's definitely, and this is why we had to drop Project X. It's for reasons like that, man. Project X is unfortunately, it's a great platform. It really is a good platform. I love the layout of it. I love the ease of use of it. There's just stability issues that need to be addressed before prop firms go back to it. Kyan Coney Godfrey, love your smile, bro. Oh, thank you. I'm glad my smile is appreciated. And I liked your trading strategy. Ah, many thanks, many thanks. I hope it helps you. I hope we can, show. Okay, here we go. So I'm going to focus more on trading view, obviously, because this has got a lag. But now I potentially want to see some sell pressure coming into the market. Some buyers get trapped. We're in that little gap area. Let me just load up my cash account. Oh, where is it? I'm too slow. That's it. There we go. All right, cool. Yeah, so potentially volume is not great on either side right now, but there is definitely absorption happening. You can see it's refusing to go any higher, but truth be told, the buyers haven't really put that much size on, so they could easily break this little iceberg. Oh, okay, here we go. Here's a bit of size, 300. They're still not really pushing it up, so there's 100% an iceberg in that area. I just want to see some sell aggression come in. 500 that the buyers are really putting in, but they did break through that iceberg. So this is really now the area where I'm going to keep my eye on. If we trade below it and sell aggression comes in, then I'll be happy to short. But if the buyers just keep piling on the contracts and keep pushing it higher, then obviously, well, there's no trade. So, but they had to put in a lot of size. You saw that the buyers had to put a lot of size to break that iceberg on the sell side. So, okay, we're starting to dip back in it. Sellers are coming in a little bit. Just, you know what? It might be worth dipping my toe in on this one. It is premature, but I'm going to dip my toe in right now. I did click. See, it takes forever to load. I can have a stop just above in that area. Hoping, we squeeze out some of these buyers and we push down a bit, at least back to VWAP or at the bottom here by the open. I think we might have a bit of a trade here. If the sellers can keep on the pressure and squeeze these buyers out, this could work out quite nicely. So potentially, we could even target these lows here. I've only got 5 micros, but again, as I said at the beginning, full transparency here. This is a demo account, so truth be told, I have no emotional attachment to what you're seeing here. This is not real at the moment. So, but it's good practice. I'm not in my live account, but it's good practice. Okay, so this is starting to look a bit nicer now. We've got a bit of buyers trapped at the top here of this candle. I don't want to see them get released. I want to keep trading below them. We do have a bit of defense coming in from the buyers originally, at the open here, or just after the open, because we do have a lot of buy pressure in the market there. They're probably, these are the buyers that kind of really push the market up near the open. So they're the ones who were successful. And you can see them coming in trying to defend. So hopefully the sellers can keep them, squeeze them out. That's it. That's a bit better. We really want to get below them. A bit more sell pressure coming in. A bit of a battle. I think once we clear that kind of area, this should move a bit smoother. Yeah, it should be. Sellers kind of failed at the bottom there, which isn't great, but we'll see. Potentially. I don't want to get really much higher than this. This is kind of as high as I really want to kind of allow the market to go right now. I want to see the sellers keep those buyers trapped at the top there, because this could just be a slight push down, and then the buyers take over and release all those buyers at the top there that are trapped. So we'll see. Plus we got the VWAP there. I'm not too into the VWAP, but I've put it on the chart because a lot of people do use it. That's it. Bit of sell pressure coming in, 106, but we're getting absorbed. Look at that. The buyers are pretty good. Holy Earth. Hey, Sammy, what's up? Hey, Holy Earth. How are you? How was your weekend? Hope you had a good weekend. Oh, look at these buyers coming back in, trying to push this market up. Sellers are coming in, defending again where they originally entered. So this is a bit of a chop zone, but these buyers are coming in strong. 300 contracts. I want to see now that we've updated that, I want to see them get trapped, these buyers. If not, if the sellers are failing here, then it's worth getting out and potentially getting back in at a better price. Didn't quite work out potentially, but let's see. We want to get below those buyers, that's it. But we want to see that sell pressure come in as we get below them, right? Trading just below them is only one step of it. But these buyers are they're being held off a bit. We'll give it a bit more time. There's a bit of chop here. Bit of chop. I think the sellers still have what do you call it? They still have you know, I forgot the word. My mind's gone blank. The ability to kind of move the market, which is good. They're not completely failing, you know. You can see when they did come in, they are able to kind of push the market down. We just need a bit more from the sell side. Obviously, the buyers are very aggressive. They're far more aggressive than the sellers, from what I can tell. Yeah, I mean, if you just look from the open, you know, before that, we were negative 4,000, right? Before the open. On the open, the buyers printed an extra 3,000 contracts. They were really aggressive, you know. And now we're trading. Okay, yes, this is looking very good. This is looking nice. A bit of sell pressure coming in, breaking below VWAP. Let's see if we can just keep that sell pressure going. Come on. Let's not fail. So the open candle was basically here. This is where essentially all the buyers came in, right? We really, really want to get below the majority of the buyers in the market. If we can break below them, this is a nice move. And we're getting very close now to where the first smidge of buyers came in. There's going to be a bit of defense here. I just hope that the buyers do not have too much volume in the market and the sellers can keep, you know, pushing it down. But there seems to be more direction in the market as of recently. Bit more direction in the market. It seems, you know, come on. I don't like the fact that there's a lot of sellers pulled at the bottom here. I've got my finger on flattening case. It's not looking good. It's not looking good as buyers came in strong. I'm just going to see what happens with these strong buyers here. Yeah, they're able to actually push the market. Let's just see if they get absorbed. They're getting absorbed a bit. I want to see sellers defend a bit more. Otherwise, I've got to flatten. Give it a few seconds. All right, I'm going to get out. Flatten. I think we're doing another rotation up. I can probably jump back in once it happens, but I don't like the fact that we couldn't get below the majority of buyers. They just came back in, reloaded. This could very easily go back near the highs again and cause some problems. And I'd rather get out the market and re-enter once there's a bit more clarity. So let me just move this because I'm blocking the chat right now with my cash account. Let me just rearrange some of these windows a little bit. I'll make that smaller. There we go. Okay, that's much better. Now I can see the chat again. Great weekend. How was yours? Yeah, it was good. Managed to catch up on some sleep, so I'm happy with that. Salam, Sami. Omar, salam to you. How are you, my friend? Hope you're doing well. Okay, look at these sellers coming back in again. But I really didn't like the fact we couldn't get below the opening buyers. I really don't like that. You know, we got so close, we ticked them. So those opening buyers are still very willing to enter and push this market up. They haven't given up. Didn't really faze them that we moved down a little bit. Whereas the sellers, I mean, they're coming in, but they're not doing that well anymore. So I don't know. I feel like that was pretty much most of the move. And considering the fact we do have a gap quite high up, I mean, it's still a bit of a move, but this weekend gap, that does not worry me, but I've seen it play out so many times. Whenever there's a weekend gap, the market loves to revisit. Didn't revisit yesterday, which fair enough. You know, the markets were predominantly closed for the most part, no real activity. But today, this is the first kind of real active day again since the weekend. I can see that gap being revisited. So, and it's such an obvious one as well. It's not even like a small hidden kind of, you know, I think everyone has spotted that gap. You know, I mean, it's clear as day. If we just remove the drawings real quick, I believe it's this, hide them. Yeah, you can. I mean, it's a huge gap, right? And it's a big play. You know, a lot of people love to trade to them. So, but I'm still overall bearish on this market. Let's check out the daily real quick. I haven't actually looked at the daily. While it fasts around here and because I think, you know, that we're going to have a bit of range play here. Didn't quite get any extension, but if I go to the daily, let's just remove some of these drawings. Okay, it's starting to look a little bit better now to the sell side. You know, it's taken a while. It took a long while. I tell you what, it took a very long while. This little move up here was absolute chop central. But the sellers are starting to, you know, you're starting to see that. And I think it was, I can't remember which day it was. I want to say it was Wednesday, but I can't fully remember. It was either Wednesday or Thursday, but there was one day where the sell volume was clear and very, very aggressive. I think it was Wednesday last week. And I think I mentioned on the live, like, this is the first day where you really saw heavy sell volume come into the market. So I wouldn't be surprised if Wednesday, the Wednesday candle is kind of the start of the push down that we've been expecting for a while. Now, how far it will go down is anyone's guess at this point. Very, very difficult to determine. Especially, you know, going down is very hard to kind of judge because panic can set in, you know, and once, you know, if we drop a few percent, people are going to start losing faith in the market. Panic selling happens, and that can cause, you know, very quick momentum, and then you get all the dip buyers coming in. So it's a tough one to kind of call the bottom, but you know, I've said for a while, I would expect at least, you know, down to these kind of levels back again, at very least. You know, 5% drop maybe on the NQ. I've always called it a crash. It's obviously wouldn't be regarded as a crash. We've seen more as a correction. But when we were at the highs, I said about 5% I would expect. So that would line up with, you know, these lows here. But yeah, there are big sellers in the market, and there have been since the beginning of the year. People, you know, there's been big institutional sellers shorting passively in the order book. And they're doing that for a reason. What the reason is, well, they believe it's going to go down. You know, fundamentally, they believe for some reason it's going to go down. Maybe they think the AI bubble it's time up for it. Maybe they know something we don't know. Who knows what their thinking is? All we know is that they're doing it. And if they're doing it, I'm going to essentially side myself with them. But yeah, we just got a bit of range play. Cody says, hey, Sammy, how long have you traded this low volume area type strategy? Oh, pretty much most of my career. So it wasn't something I really was taught when I originally started trading, but it was something I wouldn't say discovered. Like I didn't invent it, but it's something I discovered on my own as I was backtesting. And what I would do with the volume profile, the way I backtested it and kind of discovered it was I just, I drew legs on the volume profile, whatever it is. This is, let me just set the extend right off. Come on. There it is. Yeah, so I'll draw legs and then I'd mark out, wherever price kind of rejected from. And I would put like a little marker there. The price rejected somewhere around here. There seems to be, and then I would look on the volume profile. What does that match up to? And I would always, majority of the time, price rejected from a lower volume node trapped between two heavier volume nodes, two, larger volume nodes. I thought, okay, that's interesting. So I drew out that, whole area, those three nodes, and I kind of backtested and I realized that price likes to reject of low volume nodes. And then I added theory into it. And I realized the reason for that. And then, the more I kind of researched and spoke to other traders, other people discovered, similar kind of things. And then I realized the reason behind of why it's like that. That the volume profile is more of a measurement of time than it is volume. And low volume nodes essentially means, especially with higher volume either side of it, essentially means price just kind of gap through, move very quickly through that area. And the reason it did that is most likely there was a large order placed at some point in that area. So it's actually more of a measurement of time, and low volume nodes are essentially high volume. Do you know what I mean? High volume with little competition at the time. So that's how I kind of discovered it, and there were other names for it. And yeah, and I've been trading it ever since. Have you checked out Deep Charts? I was looking at it and they have back testing for order flow. Yeah, Deep Charts looks incredible. Honestly, looks really, really good. I have yet to actually take out a membership. I will get round to doing it. I have a video planned where I go over, all the popular order flow platforms from, the cheapest to the most expensive, and I'll test it and give you the pros and cons. And so I've got a video for the main channel, well, not main channel, I mean a main sort of video planned, and I will include Deep Charts into it because I think from what I can see, they look really, really good. And I love the idea that, yeah, you can backtest order flow, because that is a, you can't replay the footprint even on TradingView. You can't do it, and that's always been, so you can really only forward test footprints. It's hard to back test a footprint. I mean, you can look back and kind of say, okay, but what's very important in the footprint is how it's developing. What's actually happening in the moment is important. Hey Tom, you're back. How are you? Good morning, Sam. There is only one spot I'm willing to place a trade at today based on volume profile over the past 5 days, and another known liquidity spot. It's a short and we're not there yet. If we don't get there, I won't be trading, man. And that's the plan. I'm going to guess it's something to do with the weekend gap potentially, or are you looking, are we talking NQ here, Tom? Or I forget always what you trade. I think you trade the NQ if I'm right. I mean, for me, definitely the weekend gap is for me the kind of, I'd love to short into the weekend gap. It's not that far away. I mean, I say it's far away. It's 200 points away. I mean, NQ can certainly move 200 points. It's, it can do that very easily, but it's just looking a bit lackluster right now. I've got this bad gut feeling that we're going to be a bit rangy today. Because again, we opened and we're not really going anywhere. We're just kind of ranging a bit. And buyers are very, they're finding it hard to kind of break this area. I do think they will break it. but they're having a bit of trouble. Maybe once we break that small gap here, this low volume, there'll be a bit more quicker movement up, and then we could potentially revisit that gap because we're not that far away. This is a very good question. I'll decide that later. Said, how do you trade all-time highs? I hate all-time highs, despise it, because it limits what you can do. Do you know what I mean? You can't short all-time highs because you just don't know. You have no information. You have no once the market goes into that all-time high category, there's nothing to the left where you can base your decisions on. And it becomes very, you have no levels. The only levels you can kind of figure out are psychological levels, then round numbers, 26,500, 27 on the dot. You're going to expect something because they're just psychological levels, right? So all you can do with all-time highs is either wait for pullbacks and, play the continuation buy again once you get a pullback, or wait for, the top to finally top out and, you get a bit of consolidation, bit of bearish market structure. And then once it starts becoming a bit more clear, right? Yeah, this is not just a pullback. This is probably, more of a kind of downward move, a bit more longer term, not longer term, but I mean, maybe a few days we're going to drop down or whatever. Then you can start trading normally again. But all-time highs is a ball ache, man. I hate all-time highs. Despise it. So I really hope, we're going to get to all-time highs eventually again, of course. But I hope it's not soon. It's no fun. How we can use footprint. Can you make quick and easy video on it? Absolutely, Omar. I will be making a very kind of, the videos I have already, I kind of just do more trade breakdowns and I'll show you the footprint in it and what I saw. But if you want like a really in-depth, footprint kind of video where I explain exactly, the ins and outs of it all, I can absolutely do that. Benjamin, good to see you again. Good evening, Sam. Good evening to you, Benjamin. How are you? How was your weekend? Dr. Kais, I'm assuming. Same, I hate them. Oh, for the all-time highs, yeah. Not fun, man, not fun. So yeah, we're still ranging on this open. And you know what? It's always good to observe the open, even if you don't trade it. Observe what happened. Even the opening candle can give you a bit of insight into what to expect for the day. Like the few minutes into the open, we had like a very rangy kind of open. Generally speaking, it doesn't sort itself out that quickly. It will range for a bit because all that means is at the open there's again a bit of disagreement. A lot of buyers, a lot of sellers, and not just any buyers and sellers. We're talking big buyers, big sellers, people who matter in the market. They're at a disagreement, and if generally speaking, when they disagree with each other, they fight, and a fight looks like a range, and you get a ranging market. So yeah, but once there's, if it opens and it just kind of goes, no disagreement, those are usually very strong trend days as well. It's not like a, absolute rule, but it has some truth to it as well. There's many days where it can open a bit rangy and then finally, boom, 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 starts trending, and vice versa. But it can kind of give you an idea of what the sentiment is, just from looking at the open. It's sad to say I failed my second phase today. I only trade gold, not the futures, but the gold CFDs. Is Bookmap have a gold heat map, or is this Bookmap is for stock markets, only for futures? So, Benjamin, don't worry. Everyone fails. Challenges and all that. That's completely normal. Just recognize where you went wrong. Now, bookmap. Okay, so you can't get it for gold CFDs, but you can get it for the gold futures, right? But what's important to recognize is that essentially the gold futures chart and the gold CFD chart is essentially the same. So if you're using the data, you can still trade a CFD broker or prop firm. That's absolutely fine, right? You can still execute on, your gold CFD broker or prop firm. But if you're using bookmap, you can use the gold futures, right, as a guide as well. Okay, it's more than just correlation. They're almost identical. Once in a while, they kind of, they might be a little bit different in terms of, I'm talking a few points maybe, but otherwise they're 99% exactly the same. And I can show you as an example. If I just do candles, 1 minute, right? Oh shit! Don't tell me my internet's dropped. Something happened. Just anyone in the chat, just let me know if I'm still audible and visual and everything. The stream is still running, because I just saw a little flicker on my internet, and YouTube loves to kick it off without telling me. But I'll keep explaining to Benjamin. Yeah, you can hear me. Okay, perfect. Good, good. My heart stopped for a second there. I was like, YouTube, don't do this to me. But it's all good. What was I saying, Benjamin? Yes. So if we go to like a XAU, just any gold CFD product, right? XAU. Okay, we'll do this one. Just kind of look at that chart, right? This is the 1 minute, and then we're going to go to the futures. You'll see it looks identical. The only difference is going to be the price itself, right? The actual price number is different. So at the moment on CFD, depending on the broker, obviously everyone has a little bit different pricing because it's decentralized, but we're around 4,740. Now if I go to gold futures, but just remember how it looked. It's identical chart, but the price is a bit different as well, right? So 740 is down here for the futures, but the chart itself in terms of the actual candle movement is identical, right? Only very, very occasionally you might see, for example, this candle and futures might be a little bit bigger than the CFD version or something like that. But for the, generally speaking, identical. So definitely use the gold futures, the volume profile, all that stuff, bookmap, the heat map, and then you can just execute on a CFD platform. That's absolutely fine. And it's not just gold. You can do it with NQ. The NQ chart, 1 minute, looks like that. Obviously, the price is going to be a bit different. 25,300 we're at. Now, if I go to like NAS 100 on some CFD broker, pretty much looks identical, right? So you can use, you can trade CFDs based on the futures market, okay? Because they're tracking the same instrument at the end of the day. The only data I wouldn't truly trust is like Bitcoin futures. Just because, the futures market for Bitcoin is relatively small. And the real volume of what actually drives Bitcoin is not the futures market. It's the actual crypto market, the exchanges, Binance, Kraken, whatever. So like if you look at Bitcoin future, I don't even know what Bitcoin futures, what their symbol is, to be honest. I've never traded it. Maybe BC or something. I genuinely don't even know what the Bitcoin futures are. If I just go to futures, BTC. Oh, okay, so it's just BTC. All right. It just looks disgusting. It's just filth because it's a very low volume market, Bitcoin futures, right? I wouldn't trust like the footprint on this and make decisions based on, the footprint, because again, look how small the volume is, right? And this is not the true volume of the full Bitcoin market, right? Because if you go to, Bitcoin for, let's say, Coinbase or something, if I go back to all Bitcoin, we do, let's say, Coinbase will, again, it's open because it's a real exchange. So you have real volume data here. I don't know why it's not actually loading. Let me just go to auto maybe. There we go. You're seeing, but this is only the volume traded on Coinbase, right? Now, if I go to Bitcoin on Binance, where's Binance? Here it is. It's going to show me different volume, right? You see, Binance is not traded as much as Coinbase right now. So, because it's traded on so many different exchanges, so the volume, Bitcoin is basically pointless to trade with footprints, essentially. That's the footprint's not going to help you on Bitcoin unless you happen to look at one exchange, like let's say Coinbase, and you see a massive whale or something. But then you don't even need a footprint for that. There's people on Twitter who'll track all these kind of wallets and whatnot. So it's there's no real major edge with the footprint when it comes to Bitcoin. 8 to 10 pips is the difference. Yeah, exactly. Hello, Sam. Is it necessary to trade on a tick chart? When you say tick chart, you mean like the 1 second kind of, tick by tick kind of chart? You sometimes get it in MT5, like in the corner, where you see the second by second kind of play. Is that what you're talking about? Dr. Kais, I've been trying to use volume footprint over the past week, and I've got to say it's a hard nut to crack. Yeah, it takes a while to get used to, right? The worst thing you can do is chase volume on the footprint, because what most people, they get the footprint, they say, oh, look, big volume, buy. Or, oh, look, big sellers, sell. You're always going to get chopped up when it comes to that, right? Only on a few days when the market is just shooting off in one direction with no kind of, breaks on it, and it just keeps going, that would work. But generally, 90% of the time when the market is a bit rangy, whatever, creating, different structure and not just, one giant candle in one direction, you're going to get chopped up. And it's always down to, essentially, it's down to market efficiency. It always comes down to efficiency, because the footprint only shows you market orders. So if I hit buy 5 contracts, you'll see 5 contracts appear, right, on the buy side. Now, if I place a limit order, down here somewhere of 5 contracts, it won't appear on the footprint. It will actually appear as 5 sells, because it will match me up with some market order of someone hitting sell, right? So you only ever see the people actually doing market orders. You don't see any of the limit orders being hit, right, on the footprint. So that's why, and the limit orders matter, right, because they're the supply, market orders are the demand, right? So if there's more supply than there is demand, it's not going to go up any higher. Do you see what I mean? Even though on the footprint it looks like, oh, there's a hell of a lot of demand. So you want to look at how efficient the buyers are or the sellers are, right? The buyers weren't very efficient here, put in a lot of volume, didn't really get the market up. That's why I took a short here. As we kind of, a bit of sellers came in, I took a short. Granted, didn't really go to my TP. I was targeting much lower down, and then we just started ranging. But nonetheless, it wasn't the end of the world. I don't even know if I made really any profit on that trade. Okay, I made like $200. But it was a failed trade. Didn't really, extend and do what I wanted it to do. But it was a slight opportunity, and you take it. So they're not always going to work out, because the market momentum can shift very quickly, especially in a ranging kind of type market, because you're going to get people, if they feel it's low down enough, they're going to start buying again. And once the buyers come back in, they could easily push the sellers, push the market up and squeeze out the sellers. And then when we're near the top, sellers are going to come back in, and you just get this kind of up and down movement. And but it doesn't really go anywhere, so eventually though it breaks, and yeah, we get some movement. I did manage to spot absorption twice. Very good, very good. So once you start spotting it, then it starts becoming a bit crystal clear. And it's like with anything, it's like learning a new language. That's the best way I can describe the footprint, right? If you let's just say, I don't know, if you're learning Mandarin or something, or Cantonese or something, like a language completely different to English, right? At first it just sounds like sounds, right? It's just noise. Your brain doesn't convert it into any meaning. But if you actually learn it, then those noises, it creates meaning, and that's no different to the footprint. It takes a while. At first, you're gonna have to think about what you're seeing, but after a while, your eyes are trained to it, and then you see it without having to think. Do you know what I mean? So it's just purely, keep practicing, keep watching it. The more hours you spend watching it, the more fluent you become at reading it. I promise you that. I'm using this FXCM CFD volume footprint. I think they don't have a subscription to get. Yes, Benjamin. That's going to be so that broker you mentioned. I'm not going to repeat their name because I'm not allowed to repeat other names, but that is a CFD broker. So what you're seeing there is pure tick data. Okay, you're not seeing any real data. So you can see the tick data for the Nasdaq, right? So I'll show you as an example, right? So remember this big, so this is the real volume, right? Remember this big 600 contracts. I'm just right here. Okay, we're going to remember them. And that was at 234. Now I'm going to go to a CFD broker, NAS 100. And TradingView is going to still show me the, what do you call it? The footprint, but it's just tick data. So 34, look. There's no 600 contracts there. This is just ticks. Completely blind, right? It's completely useless using tick data. I don't even know why TradingView even offers it, to be honest, because if anything, I think it confuses people more. But yeah, there is no 600 contracts. Do you know what I mean? It doesn't exist on the tick because there's no way of it knowing. So if you're using like CFD tick data for the volume footprint, completely useless. You're only going to confuse yourself more. So you need to it has to come from the CME, right? Anything that says CME, for gold, it's going to be COMEX, but it's part of the same group, so don't worry. So why am I writing COMEX? But GC, COMEX, right? That's fine as well. But and to get that data, you do have to subscribe to it, all right? You can do it on TradingView. At the bottom of their website, they have like a CME Futures subscription, something like that. It costs like $10 a month. It's not expensive. But then you actually get the real-time data. Otherwise, you only get delayed data, and it's like 15 minutes delayed, which is also pointless, right? So, yeah. But it has to be from the CME. If you're seeing anything else, if it doesn't say CME on it, you don't trust it, essentially, right? It's just made up. Well, it's not made up, but it's tick data. It doesn't actually show any real volume. So you're just not going to know. Victor the Rook, sorry. For a consolidation market like today so far, would you recommend fading the top and bottom of the range? You absolutely can. That's a legitimate strategy. You absolutely can. And I mean, there's no problem with that. When it's like a clear-cut, defined range like what you're seeing, why not? Do you know what I mean? Eventually, you're going to get caught out because it will break out. But then, fine, all right, you lose one trade. Who cares, right? If you've made 3 or 4 rotations, it's an absolute legit strategy. Range trading. There's nothing wrong with it. You can absolutely do it. So absolutely, yeah. What I like to do on the ranging market, though, I mean, I like to look at more the cumulative volume. So I look at where the range started, right? So we kind of started the range, around here somewhere. And you can see that the cumulative volume, it's a bit annoying because we had a massive, kind of a massive huge spike of buyers here. But let's once it starts calming down and truly ranging, probably around here, you're looking at around 400, negative 400, give or take. Yeah. And right now the cumulative volume is negative 2,000. So the fact that there's been an extra 2,000 sell contracts traded in this area and we haven't pushed down gives me more kind of belief that the buyers are probably going to push it up. They're the more efficient side of the market right now. So only two things can happen, right? On a range, it can either go up or down, eventually break out. Now, doesn't mean I would be more inclined to buy right now simply because of that inefficiency. Okay, so when we get to the bottom of the range, I would be more happy to buy the market than potentially wait for a breakout for the sell side. Now, it can still break out on the sell side and push down, absolutely, but you would need to then see, it would need a lot more sellers to do that, right? If the sellers come in extremely aggressive, and I'm talking, adding 300 contracts, another 400, another 300, and they really just overwhelm the buyers, then yeah, sure, they'll push the market down. Like, it's like a boxing match, right? Strategy and kind of, how quick you are, all that matters generally in boxing. But if you're up against an opponent who's just 2 times the size, absolute monster of a human, do you know what I mean? Like, size will eventually just destroy the best of fighters, okay? Because you just can't really beat size eventually, right? But if the sellers don't put that size in and don't put extreme aggression into the market, there's a good chance the buyers are going to probably push this market up. And now that we're kind of near the bottom of the range, I will potentially look for even, buying this market. If now that we identified that the sellers are the least efficient, I will look at potentially longing the market. So you can see sellers coming in a bit aggressively, but again, it's not a huge amount, 100 contracts, to getting absorbed a bit. I'm just going to see, we're pretty much at the bottom of the range. I'd say the bottom of the range is really kind of, around here. We're near the lower end of it. Let's see if, and this would be just purely hunch based on, the fact that we're in a range. Sellers are the weaker side or less efficient side even. I can have a stop below the range. We didn't really get any kind of false manipulation type move. It's not really manipulation, but everyone calls it that. We didn't really get that, but we don't necessarily need it either. So I'm just going to see if there's a bit of buyers coming in, but again, the volume is quite low. Sellers are still happy to sell into it. So let's see if they can just bring it down a bit more before we jump in. 45, 35, 11, 22. There's a bit of buyers. All right, I'm just going to jump in, set my stops, and then we can just, I can talk and just let this roll. And I think more likely we're going to go up. Now, where can I target? All right, first I'm going to target these highs here. They seem like the obvious choice. Obviously, the top of the range, there's a good chance we'll get to the top of the range and then do another rotation down. If it looks like that will happen, I might as well get out the market and then jump back in at the bottom of the range rather than just go back to break even. So we'll let it play out. It might faff around here for a bit. If you get stopped out, you get stopped out. So what? It's no big deal. And that could be the breakout, but where is it? Let's see. Would you recommend? Okay, I've said that. Do you plan to open like a Discord server? So regarding Discord, I have like a channel within Ola Prime's Discord, if that makes sense. but I don't have my own one, like complete own Discord server. So within Ola Prime's Discord, um, there's like my own little section where you can, interact with me and stuff. Um, I have that essentially. That's how I lose my second phase. It's because of that ranging. Yeah, range. As long as you identify, look, as long as you're aware we're in a ranging market, therefore, if you're waiting for that breakout and you're trying to, always play the break, there might be a slight issue there. As long as you kind of understand that, the most important thing again with trading is knowing the market conditions, and we're all victims to this. I make this mistake all the time, so I'm not even saying that I'm perfect or anything like that. I make this mistake all the time, but a lot of the time you can just misread the market conditions we're in. Are we in a trending market or a ranging market? And just knowing that alone can save you a lot of headache, right? So I want to see what's actually. See, buyers are starting. Let's look at the. I hope this ain't actually a breakout and the sellers just come in, because that would be very annoying. But I'm expecting some buyers to come in now. Okay, here we go. Bit of buyers coming in. Let's see how effective they are. Finally, yeah, they really got to the bottom of the range before coming in. They took their time. I jumped in quite early, but they really got to the bottom of the range before they came in. So let's see if the buyers actually are able to push this market up and do another rotation up. So they're coming in quite heavy, 200 contracts, but the sellers are absorbing them, right? The sellers are far more aggressive than the buyers as a whole. But the buyers have kept them at bay using less volume, which is, generally a better sign for the buyers. I'm just going to do this real quick. Cool. Okay. Look at that, 300 contracts coming in. Bit of nice size there from the buyers. 300. So let's see what happens as we get to the top of the range. Are we going to potentially break out? Or are we just going to do another rotation down? If we do another rotation down, all right, fine. You might as well just get out the market, right? But that's a lot of buy volume coming in. So this is generally good for the buyers. I should have taken that on my cash account. I kind of missed it. Never mind. That was beautiful. So we're approaching basically the top of the range. Now you really want to focus what is going on, because if it starts, failing near the top, you just want to get out the market, because there could be a chance it's just going to go back to your entry. But you can see sellers coming in, obviously, as expected. Let's see how effective they are. Realistically speaking, if we break below that 300, there's a big chunk of buyers there. I'm kind of probably going to want to get out. So you can see the sellers trying to come in. They're being held off, which is good. Their numbers are dropping lower and lower, which is good. Just want to mark out exactly where the top is. So the top is at the top of this rectangle. All right. Sellers still coming in at the top of the range. That's absolutely fine. They're being dropped down. You can see buyers are buying into the sell aggression, which is now good. Oh, look, another 170 instantly, 250, a lot of 300, a lot of sellers coming in. Let's see if we can hold them off. If they become effective, we're getting out, right? And if they overwhelm, like if you're not seeing buyers coming in, we're starting to struggle. Buyers are kind of laid off the gas a bit. They're still coming in a bit. You can see the numbers dropping, but sellers are reloading. It's always going back into the red, right? I want to see, okay, you saw that was at 300. We're back down to 200. That means an extra 100 buyers came in. So the buy aggression is still there. Sellers are still reloading. They're pushing it. 216 right now, 210 means a bit of buyers. 230 closed at 199 means buyers are still actively in the market, which is good, right? They haven't completely let go. We're at 86 on the buy side. That means more buyers coming in. 160, 190. That means buyers are coming in aggressive. They're trying to break through this top. But look at that. The sellers managing to push it down a bit. And yeah, it's still not like the end of the world. It could still go up because they haven't really broken far down. But I thought maybe there the buyers were able to break through, but they just weren't strong enough in that moment. Maybe they'll give another shot at it. You can see buyers are still coming in. But notice how the candle is red, and there were a lot of buyers in that market, and the candle was still red, which is not great for us. Buyers coming in again, another 130. They're really, really trying to push this market up. Let's see if they can finally get the breakout. 200, 260. Come on. They're trying again. One more go. They're giving it another shot to see if they can break out of this range. Sellers are still coming in, but we just absorbed all those sellers. That was lovely. We got that little spike and that little push up. That was lovely. We're literally at the top of the range now, to the T. Let's see if we can just, pop through. We just need a lot of orders coming through. We need them. 230, that's a bit better. Back down to 197. 250, we've reloaded. Back down to 110. 250 again. 260. 240, come on. Come on. Come on. Don't let go. Sellers are at 70. We're back to 70 on the plus side. Come on. Back to 80, back to 90. They're still reloading the buyers, so it's still okay. It's still okay. They're just trying to break through this iceberg. But if they struggle too much and they're adding a lot of volume and it's still not happening for them, that's when you also want to be like, yeah, this might not work out. How many more contracts is it going to take for them to actually break through here? The sellers are just like an unstoppable wall. But this is good. Look at that. Sellers trapped at the bottom, buyers adding even more volume. Come on. Come on, buyers. You're so close to breaking out. Come on, you can do this. Oh, so close. You were, the battle is still kind of there, but come on. I'm not seeing really any buyers coming in anymore. They're laying off a bit. A little bit now. Back to 70. Okay, good. Another 100. We're trapping them at the bottom, at the top even. Come on, sellers are coming in aggressive again. You just see that extreme battle. Now, if you've put, there's a good chance, like realistically, if this was my cash account, I would get out right now because it's too hectic, I would rather, like, this battle is becoming a bit messy. Both sides are being, I still think the buyers will eventually take it. But are they going to break out before there's a pullback? Are the sellers going to able to pull it back a bit before there's a breakout? Do you really want to hold through that retracement? That's what you got to ask yourself. Because now, look, the buyers are just kind of pulled at the top here, and they're still not breaking out higher. I'm going to give it one more candle. If I don't see anything really good from the buyers on this candle, I will flatten. So this is your last shot now, buyers. Come on, that's looking good. You need to get higher, though. They're really struggling here. There's a big absorption. The sellers are aggressive. They won't let it go higher. Come on, breakthrough. Here we go. Come on. Come on. Come on. Oh, you can do this, buyers. I think the buyers have got this. Surely they've got this now. Come on. They're making progress. It's very slow. And the sellers aren't really adding much size. 50 contracts here. The sellers are starting to give up a bit here, potentially. I think the sellers are slowly starting to give up. I'm not seeing real size from the sellers come in anymore. Not like before. Come on. So you just want to kind of see the jumps in numbers, and that's what's important in real time in a footprint. Looking at the numbers developing in real time gives you an idea of, not just how it closed, but how we reached those numbers. It gives you a real time. Like this closed at 44, but you saw that was majority of the time. That was a lot of sellers in there, and we closed bullish. Probably a good sign for the bulls, right? Sellers, there was a lot of sell pressure coming in this area, and they still can bring it down. Again, look, we're at 130. The sellers are still trying to push it down. They're struggling. So it's still good for the buyers. They just need to hold off and add a bit more size, a bit more aggression. We're back down to 50, back down to 40. Sellers are reloading. They're coming in a bit heavy again. I think this is like the last push for the sellers, potentially. Come on. Once it breaks, though, this is going to be a great pop-up. Great pop-up once it breaks. It's going to be a really nice pop. Look at that. We're back down to -30. I think we were like at 150 at one point. Now we closed at +25. But this was 120, negative like 120 or 130 at one point. So that's why it's important to watch it in real time. Do you see what I mean? Come on. You can see the candles are getting smaller and smaller. It's really being squeezed. It's like the calm before the storm. And then at any point, boop, pop. The moment that iceberg breaks, it will pop up. Like really. There it is. Look at that. 400. Come on. They're adding size now. That is definitely an iceberg order that was cleared. That's why it's such a big number. Oh, the sellers look at that. They pulled another 200 out the bag. I thought that could be it. Thought that might be it. Come on, buyers. You do have to be a bit patient sometimes as well, sadly. Part of the game is being patient. I think the buyers have it though for the most part. I mean, the sellers are still trying to sell into it, trying to keep them at bay, but yeah. I mean, there we go. Come on. The moment the sellers give up, we get this nice big pop. Pretty much starting to get that now. Getting that extension. So we finally broke the range. So yeah. And that's why the cumulative is very, very useful in a ranging market, because it can kind of give you an idea which side is most likely to win. It's obviously not guaranteed, but it can give you a kind of a decent idea, just based on the volume put in and the result put out. And the sellers put an extra 2,000 contracts into that range, and they didn't move it any more than the buyers. I'd rather therefore side myself with the buyers, at least for now, until the sellers can become more efficient and effective again. But yeah, they're still fighting it. But now, if we really break below this candle here, I'll probably want to get out. If we start going back into this, look at that. Sellers still coming in. They still haven't given up. um, let's see what the chat is saying. Sorry, I was very focused on the footprint there. That's how I lose. Okay, I saw that, Sam. How can I trade? I mean, how can I make this COMEX futures and this CFD coincide when my broker or my funded account is trading? So, Benjamin, very easy, right? Have your, MT5 or whatever platform that your broker uses, right? Have that open and you execute on the broker or your prop firm, right? On the CFD. But when you're analyzing, before you actually get in a trade, you want to analyze on the futures, right? So right now I'm analyzing on the NQ futures, but imagine I've got like a CFD broker open here and I want to buy. I'll just buy on the CFD and analyze the futures. Does that make sense? So have both open, one you execute on and one you just use for analysis. Does that make sense? I hope that kind of, makes sense. I think I should switch to Nasdaq 100 and quit this gold CFDs and to get this accurate data on COMEX. Yeah, so also, Benjamin, the NAS, the Dow, and the S&P 500. So the ES is the S&P 500, NQ is Nasdaq, obviously, and the Dow is called YM on the futures, right? They are the best instruments to trade because the volume is overall, the volume is kind of, you're seeing the futures market is the most complete market for those instruments, right? Like gold is a huge market, and there's so many things. Like the footprint you're seeing on gold. I'm just going to get out this trade because this is starting to. Let me just see, because I can't really focus on the footprint and see what's actually happening in real time. I still think it's going to go up, but it's going to keep distracting me as I talk. So I'm just going to get out. I'll hit flatten because again, it doesn't really matter for me. But like the gold market is so big, the volume you're seeing just on the future side is not really the full picture of what is moving gold as a whole. Does that make sense? So the decisions you're making based on the footprint on gold might be 40-50% accurate. I don't know, I'm just pulling numbers out my ass here, right? But it's accurate to a certain degree, but it's not. There's going to be things that the footprint won't show you but will affect the price in gold. Does that make sense? Right? And technically every market's like that. But like the ES, the NQ, more so the ES. The ES is probably the biggest one. That majority of stuff you're seeing, like the futures contracts traded on the ES, right, on the S&P 500, is the biggest market for that instrument. Does that make sense? So the volume you're seeing is going to have the most effect and most value in whether the price is going to go up and down. That's why I would recommend for anyone who's getting into order flow, start with the ES, the S&P 500. It is not only the easiest market to trade in terms of the volume footprint, it's got a really nice footprint. The volume is really, big, and the contract sizes like that are being traded are huge, very easy to read. It's quite a calm market as well. It doesn't jump too much. It's a very kind of, steady kind of calm market. The NQ is a bit more erratic. The Dow is even more erratic. So the ES is kind of calm and gives you a few seconds to really kind of, make your decision. If you want to jump in, you have a bit more time. And overall, it's just a great market to trade. All right. So the ES is definitely the one you want to practice on probably. And once you get more proficient and get a bit better, then you can move on to the NQ or potentially even the Dow. Gold, I personally don't trade it because I'm telling you, like the NQ and the ES is just a better market to trade for this kind of style of trading, right? I trust the volume and the data I'm seeing on the ES and the NQ way more than what I see on gold, okay? And, if you're still with a CFD broker, that's absolutely fine. Just trade the NAS 100. Just execute the NAS 100 CFD. Yeah. So if you want to buy the NQ, like when I bought earlier, I don't know where the hell I bought, but I bought at the bottom of the range somewhere, right? Instead of executing, if I wanted to buy here, right, I'm still looking at the NQ, the futures platform, right, and the data. But if I had like a CFD broker, I'll just buy the NAS 100 when we're at the bottom there, right? It's the same. It's the same chart. Do you know what I mean? That's all you got to do. But I'm still using the futures data to make the decision of whether I wanted to enter or exit. Right. Let's look. Do you trail to break even when you trade, or do you let it breathe? It depends. It depends. Like I would only go to break even if there's a reason to go to break even. So when I entered like here and we saw that 300 come in and we've pushed up, like that was a nice big cluster of buyers. Yeah, I'd be more than happy to, even have my stop below and more in profit than just break even just below those buyers. Because if the market was able to, if the sellers were able to break below those buyers, my trade probably isn't going to work out. We're probably going to go back to my entry and make that rotation down again before going back up or whatever. So I must get out here. So I base my exit points based on what is actually happening, and like I said earlier, if we break below these kind of this little range here where all the buyers, when we broke out, I'm probably going to want to get out because there's a good chance we could break down below again. So it's kind of like steps, but I use the footprint as the areas for where I expect, buyers to kind of keep the market, propped up. I hope that makes sense. But yeah, it's always good practice to kind of, put your stops to break even and, secure, manage that risk. Absolutely. When you say a lot of sellers, doesn't that also mean people are taking profits? Absolutely. Absolutely. So a lot of these sellers you're going to see were obviously people taking profit as well. So, if I, like when you bought down here and your take profit is a sell limit. So it will be in the book as a sell limit, right? So when it gets executed, what you're actually seeing then is a lot of these big buyers will actually be, and that's where it gets a little bit confusing, right? So a lot of the big buyers are actually going to be buyers taking profit. Now, the reason it appears as buyers on the footprint is because the sell limit, right? When it gets executed on the order book, so here, it gets matched up with an aggressive buyer. So on the footprint, it will show up as an aggressive buyer. But that's actually probably partially a lot of these buyers are going to be people taking profit. Now, the only time it will appear as a sell is if someone is physically closing, clicking flatten, for example, as a market order. Then it will appear as a sell. Okay, does that make sense? So a little bit confusing, I know, and it's a bit counterintuitive in the way you have to read it. But if you're seeing again, anywhere where you expect take profits to be, and you see a lot of, and we're in where buyers would take profit, and you're seeing a lot of buy volume come in, that's going to be partially, naturally, of course, people taking profit as well. Probably a lot of these are as well people potentially taking profit, especially if it lines up to anywhere that's quite obvious, or if you see like a little spike or sell limit somewhere in the order book, like up here we see 100 somewhere. Oh, it moves so quick. 100 around, stop moving. 100 around 420, roughly around 420. So let's see where 420 is. There was about 100 what do you call it, sell limits. Probably a lot of people take profit levels, which doesn't really match up anywhere massively, but it kind of matches up to that little spike there. But it's going to be more at the top here and here, and I guarantee you around, although I can't see it in the order book because this only has a few levels, but I guarantee around 438 there's going to be a much bigger spike. Yeah, when we're not quite there yet, I can't see it on the order book, but there'll be a bigger chunk of sell limits, and that will just be, of course, people take profit orders. Makes perfect sense. So I hope that kind of makes sense. Please, big buyers, we need you now. Yeah, they eventually kind of came in. Which prop firm are you using? So Omar, I work for Ola Prime. Full disclosure, I can only trade with Ola Prime. We are genuinely a great prop firm. Um, and we don't have Project X anymore. This is an old account as my new account gets created. But we're coming out with Ninja Trader, Trader8. We currently have DX Futures as well. If you like that platform, personally, I'm not a massive fan, but hence why I'm still waiting for Ninja Trader or Trader8 before my account gets switched. But yeah, no, we genuinely are a decent prop firm. They are stuck at the 0.618 fib. Aha. See, I don't really have Fibonacci levels listed, so all this stuff is invisible to me. But yeah, I believe you. I believe that would make sense. Just looking at it based on on the leg down, 50%, 618. Yeah, it kind of makes sense. Well, I would imagine it to be. Simon says, "Hi Sam, what's your money management on each trade day?" Truly, it depends, but I have an upper loss limit that I would never kind of want to break, right? And the same with the profit as well. Like if I have a good profitable day, like full disclosure, what you're seeing here, this is not real money today, right? This is just demo funds. I can full port this. It doesn't matter. This account is like the money is being moved over to Ninja Trader or Trader8 very soon. So this is just like a practice account essentially, just for the streams, right? So, but if this was like real money and this was my real like live funded, I would generally stop. Like if it depends on the market conditions as well. Like if the market has been very nice and I can see a lot of opportunity, fine. If I see another good trade, I'll probably take it. But if it was a bit of a struggle and then there's just not much and we're ranging a lot, kind of like today where it's just a bit, it's not great. Let's be honest. There's a lot of ranging going on, and I'm up $1,000. I'll just lock out for the day, call it a day, and be happy with that. And just stop trading essentially. And but you got to do the same with the loss. If you're negative, if you're down $1,000, whatever your limit is, right? Whether it's your cash account, prop firm account, obviously you got to set your own rules and what you think is fair. But yeah, just stop. You got to be able to walk away. But I don't really have any rules in terms of how many trades I should take. It's not like I only take one trade a day. If the market gives me an opportunity and I like the look of it, I'll take it. But yeah, if I'm down, like my average win, I'm and it depends how I got down as well. If I got down because of a bad trade and but the market's looking good, or I got stopped out just a little bit, but overall it kind of played out, and I was like, shit, I just got into the wrong time, and it was a bit of bad luck as well because you get those trades. Then okay, it's not the end of the world. I'll probably want to take another trade as well if I see the opportunity arise. But if it's just one of those days where you just get beat up by the market, I can't describe it. You're just not on top form. You're reading it wrong. The market is just being very annoying. We all have those days. That's when you just cut it. You're like, no, today's not for me. I don't know. It's just, I can't describe it. There's something wrong today. It just doesn't feel right. Everything is a bit shit. I don't like it. I'm just not on top form. I'm reading it wrong. Everything is just not working out in my favor. Just leave it then. That's when you want to walk away and not make it any worse, Yeah, I can see it clearly while you trade. Nasdaq, it's easy to read, sorry. Fixed range with a volume profile. Yeah. And like I said, Ben, use the ES, man. The ES is even easier to read than the Nasdaq. I trade the Nasdaq predominantly for the lives because it's a bit more exciting. Like, truth be told, if the ES is a bit slow. It's a bit boring to trade. It's like an old man's market, you know. But if you look at the ES's footprint, oh, like in terms of footprints, it is a beautiful footprint, the ES, right? Like, let's go back to, you know, the bottom of this range and just look like the value, like the range of volume is so much nicer. You know, you can go all the way from 48 to 600 to, you know, I've seen thousands before, 800. Look at that. Big, like you can just see like the heavy volume a lot quicker and easier, you know, with the ES. And, you know, look at that, 1,000, you can go up to 1,000 contracts plus, like quite not easily, but quite often. It just has a better footprint to read, and it's a bit slower, right? The Nasdaq moves a lot quicker. So you have a few more seconds to make that decision to jump in with the ES. So it's definitely well worth practicing more on the ES than the Nasdaq. I traded 4 challenges. This is Charis says, I traded 4 challenges solely with NQ and passed them in 15 days with moderate gains every day. Once activated my funded accounts, excuse me, I trade gold futures. It destroyed me. Had 65% success. Yeah, Charis. I was very much similar when I tested gold and started trading it. I hated it, man. I hated gold, and I came to the conclusion that the data I'm seeing a lot of the time on the market is not the full scope of the market, and that's why I'm basing decisions that might not even affect the price, but because I saw it, you know, like the gold futures really isn't that big of a market. Don't get me wrong, it's still a big market, but look at the volume as a whole. It's relatively small, right? And if you're basing decisions on this, there's a million and one reasons why the market could just shoot up or shoot down. There's so many other reasons that, you know, things that affect gold's price that the footprint just won't show you. So it's not the best market to trade order flow. But yeah, so I'm totally with you on that. I'm totally with you. That's why most, you know, big, you know, futures traders as a whole, they all trade the ES and the NQ, just because it's the easiest markets to trade. Why would you trade something more difficult? Do you know what I mean? Make it easy for yourself. No need to trade something tough. Why are you always looking for low volume node area? This has something specific. So Simon, low volume nodes, believe it or not, are generally high volume nodes. Now, I know that doesn't make any sense, but a low volume node is actually more likely to indicate true high volume than a high volume node. And let me explain that really quick for you, okay? So let's go to the footprint. Let me just get rid of some of these boxes, and I'm just going to show you what I mean, right? So we're going to go just to candlesticks, right? Let's take this little leg up here, right? The volume profile is more of a measurement of time. Now, I can pretty much tell you that the highest, like the point of control is probably going to be there, just because it looks like that's where price spent the most time, right? If you look around this area, it spent the most time in, okay? And the lowest volume area, the lowest volume nodes are probably going to be, you know, somewhere here, okay? Just because, you know, we barely spent any time in that area, right? It just shot right through. So if I do a volume profile from here to here, boom, exactly, right? That's the point of control because price spent the most time there. So obviously it's going to be the highest volume. And this is where the lowest volume is, right? But what actually caused, so when you understand that this is more a measurement of time, and it shows you, it's like the market profile is actually, or time price opportunity is literally identical as the volume profile, essentially, right? when you understand that this shows you, generally speaking, more, it shows you an element of time, a measurement of time than volume. You understand that the reason this area is low volume is because the market was able, there was obviously large orders placed that pushed the market very quickly into that area, I mean, past that area, and didn't spend much time there. Meaning that low volume area is probably where the original big buyers actually came in. And if we go to the footprint, then we can probably see, in that area where the low volume is, if I just make the clusters a bit bigger, so, I don't have to do loads of mental math here. Any second now it will load, I think. Come on. All right, the clusters are, but you can see, this is where all the heavy volume is, right? Just look at the delta, 1,277. Whereas before, and after, we've got a few hundred, 700 here, 20, 148. This is actually where the buyers truly came in. So that low volume area is where the high volume really originated. That's where I want to trade in, right? I don't want to trade at the rangy area where the high volume is, or the point of control. That's just the rangy area, right? I want to trade where the low volume is. And as we approach that low volume, I expect buyers, potentially those original buyers, if they're still in the market and still willing to buy at that area, as we get into that area, as we're slowly approaching it now, I expect these buyers to kind of defend, jump back in again, and push this market up. So that's why I use low volume nodes more than high volume nodes. Now, that doesn't mean that high volume nodes or the point of control doesn't mean anything, because naturally, again, as you get to the point of control, that's where there's a lot of chop. You're going to expect some kind of, choppiness to occur again. So you might want to get out around the point of control. You might want to look at potentially exiting, because we might start ranging again at the point of control. But I wouldn't necessarily want to short the market just based on the point of control. Does that make sense? So that's why low volume is really an indication of kind of high volume. Again, it's all counterintuitive trading. It's almost like do the opposite of what of what you think originally. That's literally what trading is. Just do the opposite of what you think is logical, and generally you're actually probably right. It is all very counterintuitive. Sherry, good to see you. Dr. Kais, I love low volume nodes. Took a few quick scalps off them earlier. Yeah, they're incredible. Definitely a scalper's dream. Cody, when you are pulling your fixed range, do you increase or decrease row size if you are looking much farther back, or typically keep it the same? I typically keep it, 24 rows, which is just basically the default. Just makes it a bit easier to see. But again, that's kind of more preference. It wouldn't really make that much difference if this was, 20 or 30 or whatever. It doesn't change it that massively. So that's just personal preference in terms of what to me looks good. But there's no like magic reason why 24 is the number I picked. That's just a default, and it works for me. So I just keep it at 24. But what I do sometimes do is, if I can give an example, let me try show an example. So what I do sometimes do is, we didn't really have it. Okay, this was a low volume node at one point. So if I go back in time a little bit to when it was a low volume node, so let me just go to like the 5-minute chart or something and get rid of the footprint because it slows everything down. But you can see at one point, if I just move this over to this area here, this was a low volume node. It's no longer low volume because we've traded so much into it. It's kind of been filled. But this was a little gap. So what I do sometimes do is I increase this number to like, let's say 70 or something. And I try and find where that real dip in volume is. So there's the dip. and I'll keep increasing it to get that area even more defined. So like 150 now, and until it kind of loses, so it's kind of lost it. It's not really, there's no real low volume within that little box anymore. Let's go back to maybe 100, but once it kind of just ends, so yeah, we can make it a little bit smaller, a little bit more defined, and I'll just draw the lines a little bit clearer. So when we get to that area, I'll expect, as we pushed up, I'll expect there to kind of be where it reacts. Now, we didn't really have that because it's not really a great area. It's just a random, but on more sort of, obvious nodes, we haven't had anything in the last few days, unfortunately. Maybe on this push up here. Let's have a look. So you can really kind of see where the low volume drops off, and it's kind of just there. So you can kind of pinpoint it a little bit more accurately, but it doesn't necessarily mean that it has to touch it. Again, they can always blow right through. You have to kind of, that's why you need the footprint as well, to kind of just, to confirm what you're seeing. I wouldn't trade it blindlessly, but the footprint can kind of help you confirm if what you're seeing is legit. And just as I was speaking before, on this little move up here, where the low volume, where those buyers originally came in, so as we came back, I expected them to potentially defend that area, and they did. I mean, obviously I missed it, but they did come in. Again, how the footprint closed doesn't always show the full story. For all I know, this negative 56 could have been, negative 400, and it dropped down to negative 56 and closed, meaning, 300 buyers came in. Who knows, right? That's why you want to watch it in real time, not just how it closes. That doesn't give you the full picture. But yeah, obviously, buyers somehow came in here somewhere, defended it, and they're pushing it back up again. So that's why the low volume areas are always beautiful to trade off. They're the best ones to trade. It's funny how I passed my phase 1 on my challenge account. I'm just using a fixed range volume and a CFD's volume footprint, which is not accurate. But the fixed range with the low volume node, they have always been respected. Yes, because tick data, again, when you're using the volume profile on like a CFD, again, it's still measuring time more predominantly than volume. The volume doesn't really matter that much, right? On the actual volume profile, it's still more a measurement of time, and whether it's CFD futures doesn't really matter. It's still, the time is the same, correct? So absolutely, the volume profile on CFDs are still going to be very well respected and going to be decent to use, because again, it's more a measurement of time than it is of actual volume. But the footprint, yeah, that you genuinely need the real volume for that. Dr. Kais, would you say level 2 data is necessary for this style of trading? Not really, to be honest. Not really. I used to love having, a depth of market, like a really nice, good one. And don't get me wrong, it can be very useful, right? But unless you're using like a heat map or something like from Bookmap, the depth of market itself is just too freaking quick and difficult to keep track of. The only time it's kind of useful is if you just happen to see a massive, order, and if it wasn't spoofing, because most of the time it is spoofing, and it actually gets executed, you kind of have a bit more, I don't know, I guess a bit more confidence in whatever decision you make. But what you're seeing on the footprint, basically, if you know how to read the footprint, you understand that every number you're seeing here, there's an opposite So, you know, an extra 187 buyers, that means there was at least 187 sell limits that were executed on that level as well. And as long as you use the logic behind of what's actually happening, we pushed up and there were sell limits. Why? Were these sellers trying to, you know, sell down potentially? Were these, you know, potentially take profit levels? I don't know. Like, if it makes sense within structure, then you can kind of figure out what is going on, right? But yeah, you're seeing the same data on the footprint. You just got to remember there's the opposite side there. But I know, you look, I mean, it's all down to preference again. It doesn't really show you anything more unless you're using like the heat map. Because correct me if I'm wrong, but I believe the heat maps, they track a lot of this data and they put it not just the real time, but past levels, past volume as well. And they overlay it obviously as a heat map. So darker colors or whatever, or brighter colors are, you know, more volume, and it's more visual and easier to kind of interpret, which I can understand would be very useful if that's your type of thing. And it'll be, I think if I didn't have a good support and resistance kind of way of drawing out, you know, good areas of support and resistance, a heat map is probably what I would move to. But the low volume nodes, you know, little gaps in volume using the volume profiles been so effective for me that I haven't felt the need to kind of replace it. And I've never truly tried a heat map. I'll be honest. I've never actually tried it. Maybe I should, because maybe I'll be like, wow, I can't believe I haven't been using this. So, you know, maybe I will. I'll give it a go one day and you know, fall in love with it. But I've never personally actually even tried it. I'll be honest. Cody says, yep, heat map is super easy to read and keeps the executed orders on the chart. Yeah, so I can see how that would be very helpful actually, because then you know, it's doing a lot of the work for you. Because you can do the same, you know, manually, but why do it manually if it just does it automatically? I can understand why that's actually, you know, makes it a lot easier to do. So yeah, no, I can see. I'll probably give it a go one day. I might convert. You never know. I might become a heat map lover, because I know people rave about it as well. I've just never bothered to try it. It probably doesn't sound good, but it's just the honest truth, you know. So look at this. What are we actually doing here market-wise? We're still just, yeah, we're still, I mean, we're going up, but we're bit by bit. It's taking a bit of time. It's still a bit, yeah. It's a very boring market today. You'll be that guy in the meme looking back at the heat map, girl, while you're walking. Okay. I know the meme you're on about. Yeah. Walking with the footprint, girl. Oh, you see, I would never cheat on the footprint. That's the thing, though. I would, I'd have a threesome with the heat map and the footprint, but I could never cheat on the footprint. The footprint will always be my number one. Oh dear. Yeah, the footprint is for me is like a godsend. If you ask me to trade without it, truth be told, like I actually have a lot of respect for people who trade just candlesticks, because honestly, I couldn't do it, man. I couldn't do it. Like just candlesticks. Okay, I mean, I would still use the volume footprints. I could probably kind of figure out, all right, buyers might come in here somewhere, and then you know, yeah. But I don't know. I'd feel so. I wouldn't be confident in my trades. Like if I got into a trade, I'd be like, I don't know. I don't know what's behind it. I don't know what's actually moving this candle. Is it legit? Is it just a thin market? I have no idea. And that's the scary part. So if you can make it work just with candlesticks, I mean, fair play to you, fair play. But I think that's why most, people who trade just candlesticks become intraday or swing traders. Because swing trading, you don't really need the footprint for it. Do you know what I mean? You can kind of figure out over the long term, right? Okay, we're in a range, this daily, for example. We're potentially, we're getting squeezed down into this kind of little area here. If we get a close below it and see a bit of momentum, we're probably going to go down for another couple of days. I'm going to go short, hold it for a few days. Like that's relatively kind of over the long term. You can make it work. Scalping, just candlesticks, that's tough, man. That's tough. I'm going to get that futures one step prime, 25K on Ola Prime to trade this Nasdaq. Excellent, Benjamin. Actually, they're giving me a code, I think 25% off. I think, I don't think the code is ready until tomorrow. They told me don't mention it just yet. I think it's ready tomorrow. But if you're willing to, if you're going to buy it tomorrow, for example, the code is SAM25, SAM25. I think it'll be active tomorrow, but if you can get 25% off on any challenge starting tomorrow. I mean, try it now. If it works, great. But from what I understand, it's not active until tomorrow. But yeah. Can you Humble Guy says, can you please explain why you don't look at prior day, open high, close low, or overnight lowest price levels? Mostly you look at footprint, but do you also care about levels with footprint? Do you think that where we are? Okay, that's okay. 1 second. For example, you enter right near open, price swings towards overnight open. My question is, how were you combine price levels with footprint? So Humble Guy, I have explained this before. I used a volume profile to get my levels, right? So my levels are always based on legs. Okay, any leg in the market. Let me just get rid of this and I'll show you what I mean. Right. So all these levels, obviously this is just a big gap from the weekend. But whenever we get like a push up or a push down, and I'm talking a bit more of a leg, not just a random spike or something, but like a decent leg, I use the volume footprint. So I draw out from the top, to the bottom here. And I look for those gaps in volume, right? So we had a gap here. It's not a great one, but there was a little bit of a gap. Obviously a massive gap here for the weekend. I mean, this is not the best example because of the weekend gap. You don't need a volume profile to see that, but so those would be my levels. Low volume nodes trapped between higher volume. Okay. I mean, open like previous days, highs, lows, all that stuff is important as well. Personally, I don't use it, not because I have any objection to using it, but it's at some point you have to kind of, what do you call it? At some point you have to, like, you can't draw out everything. If you draw out too many stuff that, last day's open, the week's high, yesterday's high, this, the opening 15-minute range, like there's so many different areas on the chart, every point and control, it will confuse you more. You kind of just have to stick to one, if you're doing like a, previous days, high, low, whatever, open, close, those levels, great. Stick to them and make them work, right? If you're using, a 15-minute opening range, great. Stick to them, make them work. Don't try and clutter your chart with too many things because it just becomes insane. You got levels everywhere and it becomes a bit confusing. So kind of stick to one. I'm not saying that, previous days, highs, lows, close, opens, all that kind of stuff. Yeah, that's legit. Like they do have an impact a lot of the time, especially the highs and lows. So if that's your thing and you find that very easy to kind of mark out and trade off, great, do that, mark them out When you get there, set an alert, jump on the footprint, look at the order flow, what it's telling you, base your decision whether you're going to, go long, short, whatever it might be. So absolutely, there's a million and one ways you can trade, especially as a scalper. Remember, you're only looking for a few points. NQ, you're looking for like 15, 20, maybe 30 points. Boom, boom, boom. You can always make money in the markets. And do you think where we are on the volume profile of, say, the first swing of New York AM session matters between NQ and ES? Like if ES had already hit the value area low and maybe a previous consolidation point of control. Absolutely, it does matter. It always matters. So if you use like the session volume profile, right? So the daily sessions, they are very, very useful, right? A lot of traders would, shit, what have I done? Give me 2 seconds. Let me just get rid of some of these. In fact, let me just delete all my drawings because it's just getting super messy. So, obviously we've got the point of control from Friday here, right? Now we're trading below that. Obviously we've got the weekend gap. So naturally, because we're kind of, I would say we're more in a bearish market, definitely more in a bearish market recently. If we start getting near the point of control of yesterday, very unlikely we're going to do that because it's very far away. But let's just say hypothetically, we're getting to that point. That's going to definitely have an increase in activity. You're going to see, sellers come in heavy. You're going to start seeing, two things are either going to happen. We're either going to have a great rejection or the buyers are going to take over and push it up. And if they do, there's a good chance there's going to be that kind of pattern, that kind of breakthrough, pull back, and then a continuation, and then boom, 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 it starts going as all the sellers drop out the market. So there's always that kind of pivot point. All you're trying to look for in the market are these kind of pivot points. Where's the reaction going to occur, right? Is it going to occur randomly in the middle of nowhere? Probably not, right? A bunch of people aren't just going to enter for no reason. It's always going to be around hot spots in the market. So, going back to what Humble Guy said, previous days highs, lows, all that stuff matters as well, because they're going to be hot spots where you expect stuff to happen. So, and remember, the market usually does two things, right? When you get to one of these hot spots, it's either going to reject, right? Or it's going to blow through eventually, or right through it. It might do it quite easily, kind of, retest, come back down, retest, and then continue, right? Or it could consolidate for a while. That's always another option. Consolidation can always happen, right? But in terms of like what's tradable, it's one of these two. Okay, and then you use the footprint, so you can set alerts at any of these areas, and when you get there, the footprint will help you confirm whether, okay, are we gonna most likely break out of it? Are we gonna reject? Are we consolidating? You can kind of figure out then with a bit of patience, what's going to happen. And even if you get it wrong, it's not a big deal, because then generally when you get it wrong, okay, fine. Like if you shorted here and we actually blew right through, all right, no worries. Now if it comes back and retests and you see buyers come in, I'm going in long, and you can generally make your money back plus a bit more. So being wrong in the market can sometimes help solidify, okay, yeah, I see the real move now. And that's completely fine. You get chopped up occasionally. I'm going to wait for that code of yours, Sam25, right? Invalid cosine volume footprint. Yeah, I already use the start 50. Well, Benjamin, if start 50, I don't know if that's 50% off. If you get 50% off, you start 50. Absolutely. 100% use that, because it's even better. I don't get any like commission or anything. I work for Ola Prime, so it's not, this is literally the code is only there, like I said, it's probably going to be active tomorrow then, because that's what they told me. It's not active today, but like if any other people want to pick up 25% off, they can use my code. But it's not like I make any money off it. I'm salaried by them, so I don't know. I'm not like an affiliate or something. So if you can get 50% off using Start 50, use that, man. Forget 25%, get the 50% off. I appreciate your response regarding volume profile. You're most welcome. You're most welcome. So let's see what's happening. I haven't really checked what this market's doing. Yeah, we're still kind of meh. It's a boring market today. It's not a great market. I mean, how many points have we actually moved since the open? The open is like here somewhere. 100 points. It's not that great. Feels a bit slow today. But yeah, I think unless anyone's got any other questions, really, I think that's pretty much summed it up for today's stream. There's I'm not seeing much right now. We're kind of just in the middle of nowhere. I mean, eventually, obviously, most likely it will keep drifting up a bit. Whether we'll touch that gap today, I mean, we could do, but it's a bit slow. Even for the NQ, it's a bit slow today. So, and volume-wise, I mean, the volume isn't terrible either, but like, yeah, I think that's Con, did you trade your cash account today? I didn't. No, didn't trade my cash. I didn't get a single trade in. What I'm gonna do though is I'm gonna have alerts set for this gap. If we get to this gap, you know, today, this gap, wherever the hell it is, it's up here somewhere. I'll jump back on and potentially, you know, if it gives me an opportunity, I'll go in for a cash account trade. But right now, I'm not really interested in anything here. We're just kind of nowhere. Yeah, so I think pretty much call it a day, set an alert, because that's generally what I mostly do as well. I just set alerts. I don't stare at the chart for hours and hours. You just get a migraine if you do that. You know, it's too much. But I generally just mark out the areas, and if we're in the middle of nowhere, okay, fine. There's nothing you can do. You know, you just wait around. But this weekend gap is really the kind of that's really the area I'm interested in. And I think we would have a great rejection of that area. Even if we just touch it. We don't even have to close it or fill the whole thing. So many times you just get, you know, just literally touch it and then boom, boom, boom. Good rejection. Doesn't mean we're going to, you know, break these lows, but we get a very nice move down. And then maybe, you know, a day or 2 days later, we kind of drift up and kind of get a bit deeper into it. But this is going to serve as a great kind of rejection point, generally speaking. So I'm very interested once we get into that area. So I'm going to have alerts set for that area. The moment that alert goes off, boom, back on the chart, and I'll be looking for a trade. Dr. Kais, thanks for another good stream. You're most welcome. Can you please provide examples for below using footprint? Okay, give me 2 seconds, humble guy. I'll just read what Ben said. Is there any YouTube, I think, that you can recommend about this low volume node? I want to learn more. Honestly, Ben, I don't know. I haven't really watched any YouTube videos about it, but I'm sure there's got to be something. Maybe just search low volume nodes, stuff around that kind of keywords, order flow, whatever, volume profile. I'm sure you'll find something, but yeah, or you can you know watch my videos, I guess. But I haven't done a dedicated one for it. I get what you're saying. I will make a dedicated one for it, 100%. Sam, how many days to pass futures evaluation account? 1 day pass. For Ola Prime, there is a consistency rule, so I think the quickest you can pass is like 2 days or something, or maybe 3 days if you know. Humble guy says, Examples below for using a footprint: absorption, rejection, continuation at certain price levels. Okay, so humble guy, it's always going to look slightly different. There's not like one clear pattern that will always indicate absorption. There's different types of absorption, right? Well, not different types, but there's different ways you can look at it. So I would say true absorption actually is when you see just heavy numbers, so big numbers that don't change, but it doesn't move. That's true absorption, right? So for example, I would just try and make it really easy here. Say where this 311 is, right? Let's say in real time right now we're there and it says 311 and let's say it was at 200 and then it went to 220 and then 230 and then 250 and then 260. So there's more buyers coming in, adding more and more, but the price isn't going up higher. That's true absorption, because that means the reason it's not going higher is because there's a big what do you call it? A big sell limit in the market right now, absorbing that buyer, right? So that's true absorption. If you see now, let's say it's at 311 and then it drops down to 150, technically that's not absorption. I still call it absorption, but it's technically not. That is actually aggression, sell aggression. Because the reason it dropped down back to 150 is because an extra 150 sell contracts, market orders, aggressive sellers came in, pushing that delta back down to 150. Does that make sense? So I should probably, when I read the footprint and say these things out loud, I should probably be using more correct terminology. So I do apologize if I say, oh, absorption, but it's actually aggression. So I should really be a bit more careful of what I'm saying as to not confuse people. But true absorption is when the number stays big or the buyers keep coming in, for example, but the price doesn't go any higher. That's true absorption, because it's someone absorbing on in the order book. If the number jumps down from like 311 back down to 100, right, now 211 aggressive sellers came in as market orders. That's sell aggression coming in, right? And look, rejection could look in many different ways, but it depends on context as well, right? So you always got to try and figure out the story of the market. Look where you are in the overall kind of area, right? So for example, we had rejection here. Perfect. Okay, I can probably so we're near these highs here, right? So naturally you're going to expect people taking profit around here. Any buyer who came in, they're probably going to be looking at potentially taking profit, right? In these areas. So naturally you're going to expect to see take profits. So when you see these kind of big buyers near the top of a move, of a bullish move, that is actually most likely take profit orders being hit. Because take profits, remember, will be sell limits, right? So these are going to be sell limit orders. But remember, the footprint only shows market orders. So the only reason you see these big buy market orders is because any sell limits from here that get executed, they have to be matched up with buy aggressive buyers, right? Who are hitting the market, a market order on buy. So they'll appear as market orders, but it's actually a lot of them are people, take profits, right? Of course, there are still people buying because, there are market orders buy. So these are real trap buyers, actual people who bought and got trapped at the top, okay? But a lot of that supply, so the sell limits, would have been probably take profits, right? Because it just makes sense. We're near a high. We've had a bullish move. People are going to want to take the money out the market. Now, whenever you see now, for example, this big chunk of sellers here coming in, you got to question, what did we just happen, right? We hit a high and we're starting to now fade down below, okay, from a high. We rejected a high. Now, any other buyer who was in the market and didn't get out the market here, didn't have a take profit. Maybe they got a take profit higher up somewhere. And they're now thinking, I don't know if my take profit's going to be hit. But they're still in this bullish position. They're probably going to start looking at getting out the market. So they're going to flatten, right? They're going to hit cancel, exit, whatever, manually. That will appear. Any person exiting manually, like flatten, will be a market order, and it will be a sell market order. So then you'll see all these big sellers come in, right? That's not necessarily new people selling. That's no one being like, oh, it's going to drop, sell, sell, sell. Partially, of course. There's always people freshly trying to sell and get in the market. But that's going to be naturally a lot of these buyers exiting aggressively, right? To quickly get out the market because they think, yeah, I don't know if this is going to go any higher. So you've got to kind of read it as a story, right? And what makes sense with the overall structure and what you're seeing. It will give you a bit more of a better kind of, give you a bit more clarity. So you got to, just, it's hard to explain. I hope that kind of makes sense what I said there. Now, continuation will be really, I mean, if we broke through here, like clearly broke through it, and we kind of drift a little bit back down, and then you see buyers come in again, and they're quite good, that's going to be continuation. Continuation is a bit easier to spot, right? Because the move is already made. The breakout has happened. We've come back in as a little retest, right? Now, if those aggressive buyers come back in, that's going to potentially be continuation, right? So it's it's a bit easier to trade continuation. There's no kind of like specific pattern you're looking for, or kind of, you're just looking, again, does it make sense that buyers are coming in here? If buyers are coming in, after a breakout and after a retest of, a previous high, and there's lots of buyers all of a sudden coming back in, that's probably going to be continuation. So yeah, why not jump in? You can read the book Markets and Momentum. I've never read that. Markets and Momentum. I'll have a look. Done watching all your vids, Sam. I need more. I promise I'll be making more. I promise you I will be making more. But yeah. Can you show where did you put your fixed range volume profile? Minsky, absolutely. So let me go back to candlesticks, just a bit easier. So all right, let me just get rid of that. That's the session. I'll go to a 15-minute. So I've done multiple volume profiles. Number one, since we're trading quite low down here now, I am going to look at where have we been even lower in the past, right? So this low here, I'm going to do a volume profile from the very lowest point to pretty much where it kind of stopped, right? So a big volume profile all the way from here to here, this kind of leg up. And then I'm going to draw out any obvious kind of little gaps in the volume, right? So there's one there. Again, any kind of nodes that are smaller than the ones above and below. There's a real clear one there. Like you can really see that drop off in volume. That's a beautiful one, right? So I'm going to draw them out as areas of, if we come back down into it, I'm looking for potential rejection, like what happened here, right? Now we haven't got down there yet. So, that will be my next big kind of potential buy area when we get there. It's probably, it's probably going to be a few days, maybe at the end of the week, maybe next week, who knows, right? But at some point, it will probably get there. We also got this kind of push up here. So it's well worth drawing it and just seeing if there's any kind of little gaps in volume, and there are. There's, one there and one there, right? So these are any areas where I would potentially be looking to buy, okay? So let's see if we've got there yet. Okay, yeah, we got to the first one earlier today. Didn't even realize, but there we go. We got to the first one earlier today, right? To be fair, this was pre-market, 9:30 a.m. my time. So this was like way, before the stream. This was pre-market, but it got there nonetheless. Now, in terms of where I'm looking to short the market, now obviously we have this giant, weekend gap. That's a clear one. But let's say that weekend gap doesn't exist for whatever reason, right? Let's just say it doesn't exist. It's normal price action, right? I'm going to do the same volume profile on a move down, right? So where did the move really kind of kick off and start? It doesn't have to be perfect, but I see, the high is kind of there. So I'm going to start really from like around here, and I'm going to go all the way down to here. So any retracement up now, I'll be looking at any kind of obvious volume gaps, right? We had a little one here. Not the best, but it's something. Potentially a small scalp if we got there. I don't know if we did or not. There's another one there. There's quite a few. There's another one a bit above. Okay, and there's a few more, really nice ones higher up, right? If we ever get there. So as we now, trade upwards into it, I'm looking at potentially shorting off these areas. So there was a potential short in this area. There was a potential short in this area, right? If the volume profile, if the footprint gave me that kind of opportunity. Now you can see there was a rejection in this area, and we pushed back down to this one. There was one here as well. I actually did take this short early in the stream, right? A little one here. So looking at the footprint at the time, was there kind of clear, potential to trade? Yeah, I would say probably there was, big buy pressure, couldn't push it up, came a bit below it, sellers came in. There was definitely a scalping opportunity to go short on that area, right? Doesn't mean, it's going to spark off a massive downward move, but, as a scalper, if you're looking for 15, 20 points, you can very easily grab that either side of the market, right? Now, if we break through that area, great. Then, the next area I'll be looking will be here to potentially short the market again, right? From here back down to at least here, right? And you just kind of want to bounce off the areas, right? If the volume footprint says, hey, look, it looks good, you just kind of want to play ping pong almost, with these areas. That's what price will do. Just kind of play ping pong. We'll bounce from here, back down to here, we'll go back to here, might drop a little bit, back to here, back up. So you can, scalp aggressively if you're very good. But you only realistically you only need to catch one or two and you're done for the day. You don't need to catch all of them. You're just upping your risk if you keep trading. But yeah, I hope that kind of shows you how I draw the volume profile, where I mark out my areas, and then only when we get to that area do I actually bother looking at the footprint, whether I should be shorting or not. Like right now, I wouldn't really want to short, even though we're in that area. I'm not really seeing any buyers getting trapped up here. There's a bit of sell pressure, but there's nothing amazing really in terms of the footprint where I'll say, oh, this looks great. Do you know what I mean? So, yeah. Peter Steidmayer and James F. Dalton are the fathers of volume profile theory. It's an OG book. You know what? I'm going to look at that, Charis. Let me take a picture of it. I'm going to order that on Amazon or something. Have a look because I love reading stuff like that. So awesome stuff. Broken Candlesticks, very educational, Sam. Thank you. You're more than welcome, Ben. For now, I'm going to trade this CFD gold using fixed range volume only, not the order block. Yeah, I mean, start with, like you said, start with the volume profile. It works great even on CFDs because, again, it's more a measurement of time than volume. But once you're ready to get into the footprint, ES and NQ, right? Preferably the ES if you're starting out, right? And, step by step. But guys, I think I'm going to leave it there. It's been a really good stream. I hope you guys had a great time. I'll be back again tomorrow, 9:30 EST, New York Open as usual. But yeah, thank you all for tuning in. And I'll see you all tomorrow. Have a great rest of your day, evening, morning, wherever you are in the world. Have a good one. Take care, everyone. Thank you for joining. Bye-bye. Thank you, guys.